Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the major US stock indices. This video is for educational purposes only and it is not a financial advice. So guys, what we are looking at is the daily chart of the S&P 500 E-mini futures. So if you recall, I will also paste a link in the description and also towards the end of this video. We were looking for this ABCD formation, and within that we had a nested ABCD formation in the green. So this maroon ABCD and also the green ABCD, which where the CD leg had actually extended and was forming a confluence zone. And we were expecting the market to find resistance and perhaps pull back from that level. And this is exactly what has happened over the last 2 trading days. Now the question is that where do we expect the support to come in? So the level that we are watching for support in the S&P 500 E-mini futures is around 40.82 to somewhere around 40.71 ballpark figures. That's the structural support here. So we have the 38.2% Fibonacci retracement of the CD leg of this maroon ABCD, and then we have some structural support here coming in at the 40.71 level as well. So this is what we are watching in the S&P 500. Look at this ABCD completion with a nested ABCD formation, and if you look to the left hand side, as we had pointed out earlier, there is quite a fair amount of structural resistance there. So it might take the price um, some time and some energy to push through this. So this is what we have been watching, and if the market does not respect the support levels, then it could mean that perhaps the ABCD cycle that we have seen is of a stronger degree, and there could be likelihood of prices moving further lower. But for now, this is what we are watching. Right, guys, let's take a look at the NQs. Okay, so here we go. So the NQs, actually we were looking for 13,275, but the market actually went up to 13,280. So that level has been met. It was there were confluence of two expansions coming together, so 1.618 and 1.272 as right here, and 13,275 had been there. We have written this as a possible target ever since the market had initially blasted through our ABCD points and it went into a bit of a correction, um, and finally it met that target, and now it's pulling back. So what we are looking at is this region around 12,730 to somewhere around 12,855 as a possible region of support. The last time when the market had a pullback in this leg, it was of this magnitude. So if we just project that from here, it comes around to 12,875, and the 38.2% retracement comes to 12,750. So this 12,750 level is the one which we are watching, if the prices are likely to correct further. Now let's take a look at the small caps, which is the Russell 2000. So the Russell 2000, it's a bifurcated market. If you look at the NQ chart, which was just before, that chart is a very different picture. So actually, technology stocks were the stocks which were worst hit in 2022 because of the constant increase in the Fed rates, so interest rates being risen by Federal Reserve, and now they have been performing much better, and the technology stocks has actually been outperforming other markets. So this is a small cap which we also have in this we also have what do you say, the regional banks, which have had a fair amount of trouble. In our opinion, the banking crisis is not over. In fact, we had done a video yesterday about the St. Louis Fed, where they have a stress index, and the stress index is actually risen above their black line, which indicates the normal amount of financial stress in the system. It has moved above that, so it is giving us a signal that okay, perhaps there is something in the financial system that we need to be aware of. So guys, I'm going to clean up this a little bit. I'm going to remove this ABCD, which was actually violated to the downside. I am also going to remove this one. So cleaned up this chart a little bit. Okay, I think I'm just gonna keep this, but I'm gonna remove this ratio here. Okay guys, so here, and just like the other indices, this is also pulled back for the last two trading days. It's very close to the 61.8% Fibonacci retracement coming at 1750. And between the 61.8% Fibonacci retracement and 78.6% Fibonacci retracement, this zone we are looking for a possible support. Moving below this is obviously opens up to the 1703 as the possible kind of level to watch, and moving below that, it's probably going to go for the October 13th, 13th October 2022 levels. But this is what we are watching for this market, the support levels between 61.8% Fibonacci retracement and 78.6% Fibonacci retracement. Let's take a look at the Dow E-mini futures. So the Dow futures are this market is fairly interesting because it's just been trading in a range for quite a while. Then it raised the 50% of the move from the 13th of October 2022, and it's gone right up to the 61.8% Fibonacci retracement, which we had drawn your attention to by having this brown line. And over the last couple of days, just like the other indices, it has also had a pullback. But if you look at the trading of 5th of April 2023, then this actually closed as positive where the other indices did not. So it appears that perhaps there is more strength in this market. If this market begins to take off, going above this 78.6% retracement around the 33,930 level, then it's a really good indication, which means that it's going to go and challenge top of the range. And with that, the other indices are probably also going to follow suit. So this is what we're watching. So guys, if you like how we do the analysis and using Fibonacci retracements and pattern recognition, then please do subscribe to this channel. And if you find this video good from an educational perspective, please do hit the like button. That way it just encourages me to keep on bringing more videos from an educational perspective for you guys. Thank you very much. Good luck and good trading.